Welcome back to Rockstock Channel. It is Thursday, October 26th. I'm sitting in a different location than Bill's there. I'm in my kitchen here, and above my shoulder is a favorite song of mine from Bob Marley, Three Little Birds. Don't worry about a thing because everything's going to be all right. That's also my phone ringtone. So along Lithium Ion Rocks, we like reggae as well as rock. I'm wearing my Atlantic Lithium hat. Atlantic Lithium is a client and a shareholding of RK Equity, of Rodney and mine. Glad to have Keith Muller back, and he's wearing his Rockstock Channel hat and Atlantic Lithium shirt. Amanda didn't have time to get her hat, but before we start today's video, we'd like to thank Lithium Royalty Corp, listed on the Toronto Stock Exchange, ticker symbol LIRC. We'll share more later in the video. We saw you recently in September. You said that you would be getting a sovereign wealth fund investment. You ticked that box, and the mining lease would also be coming. Just for everyone who may not know, this is a spodumene story in Ghana at a DFS stage, 50% partnered with Piedmont Lithium, and also now the Ghanaian government, because the Sovereign Wealth Fund took a stake at project level as well as parent level. You're listed in London, but also listed on the ASX in October or November of last year, around the same time that Keith, you joined as CEO. Want to give a short tribute to all of our good friend Vince Mascolo, who passed away suddenly at 53 last March, and he's smiling at what he's seeing for sure in Ghana, for the people of Ghana, and for all the shareholders who have a lot of good days ahead. But the market is not fully appreciating all of your accomplishments, Keith. We have Amanda here. I guess I've had you on Twitter in short snippets, but never properly interviewed. And you do have a process underway for funding, a small funding, an offtake, which would love to hear you talk about. But it's been a year of substantial milestones after, Keith, your ex-Galaxy or Cobre operated the Mount Catlin mine. The Mount Catlin mine, Allchem just announced yesterday, had record production. So one of the few people in a skills short industry, you guys have the capabilities to bring a mine in production, and half of your product is going to go to Piedmont and the Tennessee Lithium project, which has been already permitted and has also received a grant of funding from the U.S. government. So a lot happening here, but your stock's pretty much been ignored. But Keith, let's just talk about this great news, because this was Rodney's written research and has talked about the mining lease being the catalyst for the share. You guys, actually, one last thing I'll say is Amanda, Neil Herbert, the chairman, and Len Koff, chief geologist and former CEO, have all been on market buying the shares in recent times at prices higher. But it seems that every time you put out some good news, the market's selling you off, interpreting it somehow as bad news. So what is the market missing, Keith? And please update us on these. Where do we go from here?
Will do. Thanks, Howard. So let's talk about our track record, right? So September last year, we released the PFS. We said we're going to release a DFS in 2023 by the end of the financial year, and we released our DFS in June this year. We spoke about MIF, the Sovereign Wealth Fund of Ghana, coming in as an investor in our project. They have made an agreement, so they're now on board. We spoke about our mining lease, and we have now delivered our mining lease. So the next milestone for us is offtake. So I think that will take a lot of the fear away. How do we close the funding gap? To be honest, $38 million is not a huge gap to fill, but we're looking for that offtake agreement to really just close that out and take away all speculation and concern that might be in the market.
It's hard to believe that the market's really concerned about your ability to fund $38 million. You don't need new equity to do that. There are debt facilities now available, we see. What are you hearing from investors? I mean, like Lithium in Mali has been in trading halt for months now. AVZ in the Congo, DRC, has been in trading halt for since last May, a year and a half. Africa has been a very significant source of supply in the most recent term. Part of the reason for the decline in lithium prices has been DSO and some other material coming out of Africa. But for those who are interested in African related plays for lithium, you're really the only publicly listed plain vanilla spodumene story. It doesn't compute that a $38 million funding gap is the reason your stock's not performing. Why aren't investors buying your stock? What are you hearing from investors? I guess look, there was the mining lease that was the worry, right? You've now got that, but you just published that news last week, and the market environment's not been very good at present. So at your current market cap, you listed last year on the ASX at 71 cents because you thought you were undervalued in London because Australian investors understand and appreciate spodumene better. The stock is now 41 cents in Australia. It's equivalent to 174 million US dollar market cap, 5% economic interest in the project now that Piedmont has some and the sovereign government has some, but that's equivalent to a 350 million US market. The market's valuing your project at $350 million, and your NPV is 1.3 billion, which is down about $200 million, which was the adjustment from the. Why don't you talk about what you had to give the government and the change of the economic terms, and also talk about your costs and put that in perspective relative to what's going on in the market and why this $38 million funding gap should easily be filled with non-dilutive, non-equity financing.
Sure. I think we're still suffering a little bit of the curse of the country of Africa. The activities that's happening at Leo Lithium and at AVZ, many investors view Ghana as just one of the other countries in Africa. I have to say there's 54 countries in Africa, and that's very different jurisdictions. Ghana is one of the world's largest gold producer, the fifth largest in the world, and the largest in Africa. And the friendliness towards mining in Ghana should not be underestimated. So what we're hearing from our investors and perhaps addressing some of these concerns of why the share price hasn't responded as we thought it would with the release of the mining lease news late last week. Well, the first one is this curse of Africa, but I think those that understand Ghana understand why we are undervalued. I think there's been a little bit of a misunderstanding in terms of the offtake of Piedmont. Piedmont is a 50% partner, and indeed, 50% of our offtake is destined for the Tennessee hydroxide facility. So that is still in play. There's been no changes to that. There has been some words around the downstream conversion that is news in the mining lease. That's perhaps not what was expected by the market. But to clarify that is this is a great opportunity for us to have to first look at this. The government wants to partner with Atlantic as a partner of choice. We've got the optionality to look at this first. And then if it doesn't work out for us, if we can't build a resource to an extent that we want to bring a conversion facility into play, the feedstock is still going to go to the market at market rates. So there's really no downside in this for us. Really what I see this doing is this enables us to use leverage to negotiate with the government to expand our resource base. I've said this before. In fact, I think I said this to you when Neil and I was on before, is before we look at downstream seriously, I want to see the resource double. And now this is the catalyst for us to double the resource. And with the help of the government, we want to achieve those goals to double the resource, to take downstream processing seriously.
You're referring in the press release to the fact that the government actually, I forget, you also committed to listing on the Ghana Stock Exchange, and you committed to doing a scoping study for downstream conversion. And you're saying a downstream conversion plant, right, is generally a 20, 30, 40 year project, right? You currently have a mine life of 12 years, right? Or something like that. You've only explored 13% of your tenements. You have not been drilling aggressively recently. You did a lot of the infill drilling so you can get to definitive feasibility study, which was more recently. But you're saying that you've committed to just doing a scoping study. That's it. You haven't committed to doing a downstream plant, but you're saying that it's going to be hard to actually justify the cost of a downstream facility unless you had a much larger project. So what's the path to you starting drilling again and growing the resource? Because when you cut this off, what's the size of the resource at present?
35 million.
35 million. A year or two ago, Rodney was saying 50 million tons is the new 20, right? Because you've had all these other discoveries. You've just been focused on moving into production, but the expectation is that there's tons more resource upside in all of your tenements. And why don't you talk a little bit about that? I know we don't have Len on the line here, but what the scope to growth? Could this be 50 million, 100 million tons? What's the path for that?
Certainly. So, correction there, Howard. We haven't drilled 13%. We've only drilled 3% of our tenement package. So, a very small portion has really been explored. And the reason we've been holding off on drilling is we want to make sure we've got our eyes on cash flow. Now that the mining lease is approved, this is a major de-risking event for us. So now we can start looking at spending more money in country. One of the objectives of our offtake funding is not only just to cover that $38 million gap that we have, but also to free up some cash flow for exploration activity. So what we've been doing over the last 12 months is, you're right, we haven't drilled what we've drilled in the past. We've only drilled about 18,000 meters this year. I say only 18,000 meters, that's still quite a significant exploration activity. But we've been doing a lot of auger drilling and soil sampling to identify targets. So Len has come up with a list as long as my arm of places where he wants to send the drill rigs in. And now that we've got certainty on our permitting, we're going to finish the EPA permit. Once we have locked in that offtake, that's when we'll send the drill rigs out and spend some of that money coming in from the offtake on further exploration activities.
Keith, just one thing, I presume all of that exploration and expansion falls within the license area.
Not within the mining lease necessarily, Rodney. It's all around us. So our mining lease is concentrated on the mining area, but it's still within our prospecting lease. So when you refer to those figures we have on our typical presentation deck, the mining lease is only a small stamp on that. The larger portfolio is adjacent to the mining lease, but we can expand the mining lease as we bring more resources in.
So, Keith, just for those listening, just take us through exactly, now that you have the mining lease, you mentioned the environmentals, everything else, the check boxes before you can actually get going.
Sure. So the next step from a permitting perspective, Rodney, is the EPA permit. So one thing to note is there's never been a mining lease issued in Ghana where the project hasn't gone to production. So a lot of the scrutiny takes place in this first 12 months of review. So the next steps for us is the EPA permit. That's about a 6 to 9 month program. And then following the EPA permit is when we can break ground. So this time next year, I'd expect us to have shovels on the ground and actually to be breaking ground and starting construction.
Okay, great. And also your flow sheet is also amenable to no real issues on that front, I'm sure.
Yeah, so the flow sheet is a very straightforward DMS process, 3 different size fraction, dual stage processing. We are looking long term to bring some of the fines that doesn't make it to the DMS, that basically bypasses the DMS. Initially, we're intending to sell that as a low grade secondary product, but we want to look at adding more value to that and putting it through a flotation plant. I don't see that happening first up. I see that 18 months to 2 years down the track. Once we've got the DMS stable, once the DMS producing consistently and we're at nameplate at the DMS, which is 2.7 million tons, then we'll look at starting the construction on our flotation circuit, and that flotation circuit will just increase our overall recovery. At the moment, our recovery sits at 62% for SC6 and about 68% for a 5.5. So we can take that up to as high as about a 75-80% global recovery if we include the flotation plant to deal with that very fine size fraction that currently bypasses the DMS.
And you've just on, since the DFS, your thoughts on capex, if there can be any movement between now and when you actually get going?
So the DFS was published in June this year, so quite new, relevant, and inflation has been taken into consideration from the PFS, which wasn't too far ahead of that. So the places where there might be some creep on the capex would be associated with the flotation plant. So, the feldspar plant. So we don't have feldspar currently in our DFS study. So that could be probably another $10 million, but that adds a significant revenue stream as well. So it's feldspar where we'll see a bit of movement, but that's a change in scope. That's not really creep on the capex. But all the other activities is quite firm. One activity we still got to negotiate with our contractors is working capital. So how much working capital is required in our mining contractor just to bring that initial ore forward. But as Howard and Rodney, one of the strategies we have is to have that modular DMS unit up front. And that modular DMS unit generates cash. And in the current mine plan that we have, we will have about 200,000 or 300,000 tons of ore on the ROM when our industrial size DMS starts up. So what that means from a working capital perspective really is the ore feed to the plant for the initial 2 to 3 months will be sitting on the ROM, paid for by the modular DMS. We don't see working capital as a major risk. We still want to negotiate with the mining contractor. That's the biggest cost. 60% of our cost sits in mining. And typically you find in Ghana that the mining contractors carry the 3 or 4 months of initial production. Equally, if that can't happen, we're quite comfortable with the modular unit providing that cash flow for working capital.
Jumping in here from the editing room to tell you about Lithium Royalty Corp. Lithium Royalty Corp is at the center of a global energy transition and manages a globally diversified portfolio of lithium-focused royalties in electrification and decarbonization. With 32 royalties on 29 higher-grade, lower-cost projects from exploration to production, LIRC covers all the bases with well-managed risk, ESG considerations, and a scalable royalty structure. Lithium Royalty Corp is traded on the Toronto Stock Exchange, ticker symbol LIRC. To find out more, visit lithiumroyaltycorp.com.
That's great. So just to remind the listeners, when Howard was talking about the NPV, your long-term price for spodumene in that NPV, remind us?
$1,410 a ton. So on average, our life of mine price is about $1,587. But our long-term price, so from 2026 onwards, 27 onwards, is $1,410. Compared to where we're sitting today, that's still quite conservative.
And also relative to some of the other studies that have come out with the other operators.
Yeah, look, Rodney, we didn't want to inflate this. This is a good project as it stands. I've seen some producers use prices of north than $4,000 a ton. I think investors should be wary if they see a price, anything starting with a 3, I would think twice. Even in the 2000s, I think is still quite high for a long-term estimate, although that is probably achievable in some. But I think our 1410, that's a fair assessment. We're not overinflating it. We're not trying to sell the dream here. This is a good project. The economics works well. Our all-in sustaining cost now with the new conditions in our mining lease is $675 a ton. And again, we're one of the few producers that actually publicly state our all-in sustaining cost. We think that's important. Many we see just talks about the C1 cash cost. Our C1 cash cost is $377. So there's a big difference between C1 and all-in sustaining. So we like to be transparent and clear. So 675 is the all-in sustaining cost for us.
And if you can just reiterate again or describe again in terms of the mining investment fund and its investment, and who shares and what costs going forward and so on?
Certainly. The Sovereign Wealth Fund signed a heads of agreement with us about 6 weeks ago. We're busy finalizing all the contracts. You can appreciate there's a number of contracts and also a feedback loop to the Piedmont agreement because they're coming in on the project level. So their commitment to us is $27.9 million for a 6% stake in the project level. So what that means is the government of Ghana would essentially have a 19% stake in our project, 13% from the free carry and a 6% from MIF. And then because MIF will have 6% of the project level, that means they also have to contribute to the capital as we are spending money towards development. So that's approximately another $11 million. And then they'll also subscribe to $5 million of Atlantic shares. So all up over the next 2 years, we expect to see about $43.9 million from the Sovereign Wealth Fund. And again, I think the underlying message there is the Sovereign Wealth Fund's not going to invest that sort of money of the country's money into a project that they don't have confidence in seeing develop in the future.
And so the fiscal regime went up from 5% royalty to 10%. You were telling me yesterday that equates to about an additional $30 per ton on the cost. So your 377 cash cost was not, overly onerous. And although 10% is relatively high, but it's not, unheard of. I think
it's on the all-in sustaining costs, Howard. So the royalties don't come into the C1.
The royalties don't come onto the C1. Okay. And the MIF they agreed essentially a price of 26p. Is that right? And you're currently trading at I think like 22p. But like the government, Ghana's, as Rodney said, on the Fraser Institute, Botswana, Ghana, like are in the top 3, I think, of all African countries. It has a very established gold industry, but it sounds like they're very interested in doing things properly and developing a lithium industry, right? There's more lithium to be found all throughout Africa, but within Ghana, you're obviously the most advanced. You're the flag. They want to get it right here. If they don't get it right here with you, then investors aren't going to come and find and fund other projects. Amanda, why don't you talk about the process? I listened. You had an AGM, a very detailed hour-long video that I watched and listened, and you had some interesting updates and timing. So if you could just tell us I think you've appointed a bank to help run a process.
That's right. We've appointed one of the kind of major banks who, do this for a lot of lithium companies actually, to obviously go out to as many parties as possible. We've gone quite wide in our search. We had about 30 interested parties within our own network and in my emails and calls and meetings. So it became difficult to manage, and the money was getting quite up there in terms of what we thought we could get. So we've brought a bank in, and they're incentivized to get as much prepayment, that's our ideal form, as possible. It's about a 7-month process. We're just at the end of the first stage in terms of identification and moving to our data room phase, where we'll let people into the data room to make their first assessments, and we'll give them our criteria on what we're asking. They'll come back with offers and proposals. We'll move into a kind of next stage where we'll bring that down to 3 or 4 parties, and then in the new year we'll go into more advanced talks with those 3 or 4 parties. We'll do site visits, and then we'll pick the one by around February, March time.
Okay, and you want a minimum.
Sorry. Yeah, you would know that there's not a lot of feedstock coming into the market in the next 3 to 5 years, and we're one of the very few projects that will have available feedstock, especially the quantities that we have at 360,000 tonnes per annum. Obviously, half goes to Piedmont. We'll have 180,000 tonnes available. We want to do a 100 to 150,000 tonne per annum offtake agreement for 3 to 5 years, up to a maximum of 500,000 tonnes over the period of the offtake. There'll be options to go further and take more. We wanted to keep it reasonable within, especially in the first 3 to 5 years of production. We didn't basically put too many onerous clauses on ourselves to make it doable. But we really want to find that commercial partner as well to work with going forward.
If I remember well, the details, I may get off a little bit, but Piedmont did an offtake with LG Chem earlier this year. They invested $75 million, I think, and they got 200,000 tons over 4 years only, right?
So that was my starting point in terms of having 75 million, because I thought I'll start from what I know. You can look around and see what is the deal. When people aren't blinking at 75 million, you then start to thinking, okay, we can get more out of this, and the bank's actually incentivized above 75 million to get as much as I thought we could get 75 easily with us, just within ourselves, but they're incentivized to get more than that.
Okay, and what would you do with all of that additional capital if you only need 38 million for the project?
So what it does, it's going to be a prepayment. We'll only draw down as the project needs it, and it really is about funding Awoya and our Ghana lithium portfolio and the drilling around that. So it will be very much project-based funding. We'll close the 40 million gap we have, and everyone will know the Piedmont agreement. Piedmont have to pay 70 million first, sole funding. So we actually don't need to put into the development costs probably until July next year. So we have got quite a long time before we have to put the money in. What we do with the rest of it, we are in the process of getting more prospecting licenses. We've got targets going into our identification sites that Len and the team have kind of worked out. So we are likely to do a bigger drill program next year. So as we've always said, as we have line of sight to cash flow, we will then start the drill rigs up again to really grow the resource, increase our tonnes, and get that going for the company. The actual resource is what I think drives the share price. So the more we put into that, the better. And also to extend the mine life. At 12 years, we want to get it to a 20-year, 30-year mine life.
How would you characterize the nature of the offtake partners that are in the data room? Without going into specifics.
Yeah, I think we went out into excess of 80 parties at the start. So the ones in there at the moment who are probably interested to cover the whole gambit. So we've got the chemical converters, the battery manufacturers. There's a bit of traders going in there. There's also the OEMs are in there as well, and they kind of work in combination with each other. If you can imagine, an OEM doesn't want to get a spodumene delivery. So there's a lot of combinations in there as well. So yeah, it's a whole mix actually. There's a lot of going through Europe and the US. Even today, I had a call this morning at 8:30 saying, can I meet someone after lunch, because they wanted to talk about our feedstock that was available. And it was quite an exciting meeting. So I can do 2:30 only, and that's what time they made. We met in the city, and we have another interested party. So as we've done the mining lease and more comes out that we have available feedstock, the need and I think the fear of missing out is increasing.
And maybe, man, if you can talk a bit about the sort of partner that we're looking for.
Yeah, so basically we're looking for someone that's in the supply chain already. We want our spodumene to move. We want it to be a credentialed partner. We want someone that's happy to work in Ghana. Ghana is trying to grow their lithium industry. They see it as a strategic endeavour for themselves to be part of this electrification thematic. So we need a partner that's happy to work in Ghana. And there are quite a lot that are happy to work in Africa and in Ghana, because it's obviously a great gold jurisdiction. So we see that as important as well, because this will be our supplier, and it won't just be for the short period that we have. If we've got a great partner, we'll just continue on with the arrangement going forward.
Okay. You mentioned the EPA permit as the next kind of step. So help us understand. I think mining lease, that's the key thing. You're good to go, but you still need to get another permit. So is there any risk? Is there any risk that the sovereign wealth fund doesn't complete this? You still have to get that over the line. We're in a jittery market, and if people could kind of like look at reasons to be negative, that they could talk themselves into being negative. How real are the probability that there could be some hiccup on either the sovereign wealth fund finalizing their investment and the EPA permit running into some hurdles that may impact your timeline?
Yeah. So the EPA permit consists of two distinct activities. The first one is it relates to the environmental impact around our immediate operating footprint. That work is done. You don't need your mining lease to conduct that work. So we've already completed the environmental impact assessment. So we understand what the environmental impact is, and there's no red flags for us. Then the second component is associated with the community. So getting the community on board and on board with the project. And we've been saying this, the only complaint we've been getting from the community is, why haven't we started yet? They don't quite have a full appreciation for the duration and sometimes what could be perceived as the bureaucracy involved in obtaining permits. So that's really the only complaint we've been getting. In terms of risk there, I highlight again, there hasn't been a project in Ghana that went through a mining lease and didn't go into production. Historically, if we look what's happened, the bulk of the due diligence for Ghana is already done. I don't want to discredit the EPA process. That is still work that needs to be done. But from what we understand and from the investigations we've done so far, I would want to suggest that that's a formality. We just got to work through the process.
Howard, so you talked about, I think the deal and the arrangements that have been made in Ghana have been right through the ministry, the president, the MIF, all of the people involved are committed to this project and committed to their lithium industry. So I would see it extremely unlikely that the MIF agreement would not be completed.
Okay. We'll put up some pictures here that you put out last week with Neil and the team with all of the various interested parties in Ghana. It very much seems politically, there's an election coming up, right, in Ghana. Is this a relevant, important, thing that they're campaigning on the positive side, as opposed to the political football that lithium often is in Mexico or Bolivia and some other countries?
No, it's a mining jurisdiction. They want to grow their wealth through more mining, and expanding out of gold into lithium is exciting for them. There's something they see that can add to that. Okay,
that's great. So do you think, the partner you think is this, again, Amanda, you're looking for the China versus ex-China? Obviously you're partnered with Piedmont. Is there a vision? Could this be a Chinese partner, or is it going to be ex-China?
China are really comfortable in Africa. We've met with many of the Chinese partners and we get on really well. We don't really have an issue. The going into the existing supply chain means it is going into China at present. But we're happy to look at other combinations, especially through Europe. When we first rebranded, the idea was that half would go to America and half would go to Europe. But Europe have to be ready for it. So a lot of the parties that are coming through that way have mechanisms to go through China first while they're building their converter, and we're comfortable with that as well.
Short term, it might go to China because it has to go to China. There's no conversion capacity anywhere else. But the medium to long term, in Leo Lithium's case.
Yeah, they're working with the European converters to build those conversion facilities. The skills at the moment in building a conversion plant sit in China. and it's coming out, and that's the kind of what's going to happen. The skill sets will come out, and there's many different combinations that happen. But what we don't want is spodumene to be sitting on the side of the Takoradi waiting to go somewhere.
We're seeing a lot of takeover activity in Australian assets. When Vince was around and we started working in March, you had a process at that point. There was some thought that there might be a sale. You ended up partnering with Piedmont. Assor, a South African private equity group, owns, I think, 25% of the company. Piedmont, how much do they own?
So they're at 9.4, I think, at the moment.
9.4. So 34% is held by those two parties. Makes it hard to for a takeover bid. So I think you're a going into production story. So for those, it's possible you could be taken over. Who knows? But the valuation is like way too cheap. But for those who are like attracted to the cash flows that, I don't know, Pilbara is making at a low cost, with exploration upside, there's a big valuation discrepancy here. And Rodney and I are going to record our Rockstock recap tomorrow. We're going to go through some of this M&A as well as the MinRes, Pilbara, and Allchem. I think we're going to I'm just going to remind everybody here. I forgot to do that at the beginning. If you like this video, please like and subscribe to Rockstock channel. We put out our most recent Lithium bull, taking a cue from the Rolling Stones, the first new album in 18 years. And Mick Jagger with Lady Gaga. He's 80 years old. Just God bless him. I hope I'm as spry and have as good voice for maybe doing these videos as he does for singing. But I took inspiration from that, calling it Angry Lithium, the Rolling Stonks. Like I said, don't worry about a thing. Everything's going to be all right. That's essentially what Dale Henderson was saying, what Chris Ellison was saying, and what Martin de Soleil was saying in their conference calls. Rodney, any final kind of questions or anything I failed to ask here, Keith and Amanda, that you want to impart?
That's clear, and people should be able to understand the value proposition from here.
Sounds good. Keep it simple, stupid. Keep it spodumene, stupid. The market is hungry for feed, and to be continued. All right. Thanks very much, Amanda, for the first time here on Rockstock. Keith, I think second or third time, but very timely to have this update. And
thank you.
See you soon.
See you.
Cheers.